Well, since the start of the year, the stock market has been down. And the question is being asked is, where is the bottom? Experts claim inflation and fear of higher interest rates are driving the market down. Financial advisor Jonathan McCoy is here again to give us some insight on this situation. Jonathan, are there any signs to look for that could indicate we might be getting close to the bottom of the market? Are we settling down here at all?
Well, I always reiterate to people, try not to pay too much attention to the headlines, but the headlines have actually become somewhat important, especially going forward. And what we're looking for is, are we getting unexpectedly bad or unexpectedly good news?
Yeah.
And I think that some of the things that we're looking for are, do inflation numbers start to come back under control, hopefully a little quicker than expected. I think the Federal Reserve and some of the interest rate adjustments that they're going to make are going to have a big impact on that through the end of the year as well. But, ultimately traders are looking at, when can I get the best discount possible? And that's when you start to see the market sort of start to rebound or melt back up, is when the big institutional money investors start to reinvest their funds as well. So we've gotten some indications that maybe we're starting to see the beginning of that, but sometimes you'll see a little bit of a bump up, followed by a further fall down, similar to what we saw in 2008.
I remember one of the things when I first started contributing to my 401k and my retirement, my dad was like, now don't check it every day. Just do a little bit at a time and check it periodically, but don't give yourself a heart attack over it.
And it's easy to have that mindset when you're years or even decades out from retirement. The folks that are living on those retirement assets today, we start to see people unfortunately reacting in an emotional fashion.
Yeah. So. Well, with all the inflation and volatility, what does a balanced portfolio look like? Is there something that's safe or maybe safer that we should be positioning ourselves to, just to protect our money or maybe even still grow it?
Well, from a retirement planning standpoint, a balanced portfolio is you've got a portion of your assets that are designed to grow over the longer period to offset things like the inflation that we're dealing with today. But then you've also got a portion of your portfolio that's designed to provide you the income that you need on a daily, monthly, and yearly basis to be able to ride through downturns like this. And we find that a lot of the folks that we're talking to that have financial advisors that are, in not so many words, panicking during a market downturn like this, oftentimes we found that their portfolio balance between those safer investments that can help them ride through a downturn and those more aggressive investments, that balance has just been off. So the definition of a quote-unquote balanced portfolio really should be determined by your circumstances and what your income needs are.
Totally up to the individual there. So
exactly.
We do have a viewer question. This one is from Elaine. Now she asks, my husband, who passed about a year ago, had always said annuities were not for us. Since his passing, I've had friends share that they have annuities as part of their retirement portfolio and are happy with them. Are all annuities the same, or what are we looking for?
Well, we have to be careful in discussing annuities because they're one of the most convoluted products and misunderstood products in the financial services industry. And a lot of them can come with some high fees. A lot of them can come with these different insurance riders and aspects that may not be appropriate for some folks. When we go through a full-blown portfolio review, which is what we offer through our consultation process, what we're looking for, especially, are you paying any fees for any of these riders or benefits that you're never going to use? And oftentimes we find that is the case, and unfortunately sometimes some of these different products, riders, and fees were sold to help boost maybe the commission or compensation that was paid to the agent that sold the annuity in the first place. So we have to understand what's in it for the advisor, what's in it for the client, to make sure that we're building those beneficial relationships and you're actually getting the product, the investment, that's actually appropriate for your situation.
Yeah, well, that consultation is very important, and if you want one, you can meet with Jonathan and his team to submit your questions and ask any questions you might have and how it pertains to you. Just visit askaradvisor.com or call 816-548-2000. They'll have take your questions and even meet one-on-one, totally free of charge. If you include your address, Market Advisory Group will send you a free gift. The news